Gold has been treasured for 5,000 years, while Bitcoin hit a record high with $100,000 and it was supposed to kill the US dollar. But what's wild is that the US dollar still dominates the world. But how is that even possible? In this video, I am going to show you why the dollar just won't die and why it keeps coming out on top of its competitions every single time. So, let's start with what makes the dollars win. Chapter 1. What makes the dollar win? Let's not forget that gold is the OG money, and it is ancient, physical, and has survived empires and revolutions. While Bitcoin is the super hyped, fairly new digital currency that is limited to 21 million coins ever, and free from government control. However, the dollar is, well, it's just paper backed by the US government. No gold behind it anymore. No strict limit on how many can be printed. So, when I say win, what does that actually mean? It means that the dollar is the asset that central banks around the world trust the most as a global reserve currency. Global reserve currency is the world's go-to money, a trusted, widely accepted form of cash that countries and big institutions hold onto for safety and convenience. Just like you might keep some cash in your wallet for emergencies, governments and central banks hold piles of a foreign currency in their vaults. Because it's the money set aside or reserved to pay for things like imports, debt, or to defend their own currency's value. As of 2024, 58.4% of global foreign exchange reserves are held in US dollars. That's a great figure, and that's how the king is still ruling. In addition, here's why the dollar is absolutely crushing all the competitors. Chapter 2. The dollar is safer. The main reason for dollar dominance is its safety factor. Being safe means being less volatile. Remember when Bitcoin dropped 65% in 2022? Or when it shot up 150% last year? That's called volatility, and it's basically financial whiplash. Volatility is just a fancy word for how much the price of something goes up and down. Just like a roller coaster, when an asset jumps a lot in price one day and crashes the next, it's considered very volatile. It just means the price changes a lot in a short time. Even gold, which is supposedly the safe option, now jumps around like crazy. Since 2020, it's had multiple 20% swings up and down. Let's talk about what's been happening in 2025. It's been absolute madness. Bitcoin exploded from $85,000 in January to a mind-blowing $183,000 by March. Meanwhile, gold shattered all previous records, surging past $3,400 an ounce after three major central banks announced they were doubling their gold reserves. Financial Twitter was on fire, with hashtag $dollar-is-dead trending for 72 hours straight. Investment gurus were screaming into their podcasts that the dollar's reserve status is officially over, pointing to how the dollar index dropped 12% in just 8 weeks. But here's the crazy part. Amid all this hysteria, global trade in dollars barely budged. Oil was still priced in dollars. Countries still needed dollars for imports. The system kept working while everyone was panicking. Because the dollar is steady and predictable. Sure, inflation has been a problem lately, but we're talking about 3 to 4% changes, not 50% crashes. And here's a fact. A central bank is responsible for your country's economic survival. They can't take big risks. Stable assets are exactly what they want in their reserves. Their job is to make sure a country doesn't collapse during a crisis. Would they bet a nation's future on something that could lose half its value in 3 months, or even 3 days? Certainly not. People often forget that stability beats hype every single time. Bitcoin might soar 200% in a year, but it can also crash overnight. But the dollar, it just quietly powers 80% of global trade, fuels oil contracts, and underwrites trillions in international debt. It's like the plumbing of the global economy, invisible, boring, but absolutely essential. And until something else can do all of that, the dollar isn't going to be beaten easily. But there's more to this story than just stability. Chapter 3. The dollar is more liquid. Dollars have amazing liquidity. Liquidity sounds complicated, but it's actually super simple. It is the ease and speed with which an asset can be converted into cash at its market value, without causing a significant price impact. Imagine you inherit a beautiful mansion worth $10 million, but what if you need cash right now? Finding a buyer might take months, and if you're desperate, you might have to sell at a huge discount. Now, instead, you inherited $10 million in a checking account. You can withdraw any amount, anytime, without affecting the value of the rest. That's the difference between Bitcoin and gold versus the dollar. The US dollar market is so massive, we're talking about $7 trillion traded daily, that even central banks can buy and sell huge amounts without moving the price. But if you try selling $1 billion worth of Bitcoin in a single day, you'd crash the entire market. The same goes for gold, especially if you're a sanctioned country that can't access the main gold trading hubs in London and New York. Here's a fact that will blow your mind. Over 80% of global trade happens in US dollars. That's why we say that the dollar runs the world, or maybe the world runs on dollars. Chapter 4. The world runs on dollars. Every time they trade Saudi oil, they're paying in dollars. A reminder of how the greenback calls the shots in the energy world. Pick up an iPhone made in China, and yep, the price tag is in dollars too, which makes buying from halfway across the globe feel simple. Even coffee beans from Brazil get priced in dollars on the big exchanges. All this means fewer headaches over swapping currencies, and keeps the dollar firmly in the driver's seat of world trade. Even when two non-American countries trade with each other, they often use dollars. It's the common language of global commerce. This creates a powerful cycle. Countries need dollars to buy essential goods, which means they have to hold dollars, which keeps demand for dollars high, which makes more countries want to use it. And around we go. Even countries that hate the US still rely on its currency. Take Iran or Venezuela, both under sanctions, both politically opposed to American policies. And yet, they find ways to trade in dollars through back channels and intermediaries. Because the dollar gets things done. It's not about loyalty, it's about leverage. And that's the difference between a currency people speculate on and one they actually use to survive. And honestly, this might be the dollar's biggest advantage. Gold is pretty, and Bitcoin is technologically impressive, but neither one has built a global system where everyone needs them just to function. Just like in a game of Monopoly, everyone agrees early on to use the green $1 bills for trades because they're plentiful. Everyone trusts them, and you can always cash them in. In the real world, countries stick with the US dollar for very much the same reasons. And you know who understands this better than anyone? Central banks. Chapter 5. Central banks aren't gamblers. Let's be real. Central bankers are probably the most risk-averse people on the planet. And for good reason. Their job isn't to make money, it's to protect money. In 2022, the World Bank surveyed 191 central banks about what they look for in a reserve asset. Their priorities were safety, liquidity, and returns. Notice how returns or making money come last on that list? That's because central banks aren't trying to get rich. They're preparing for emergencies. Sure, Bitcoin might moon, and gold might double in value if World War III breaks out. But central banks don't want that kind of excitement. They want predictable assets they can count on when everything else falls apart. That said, something interesting has been happening lately. Chapter 6. Change takes time. Since 2022, central banks around the world have been buying more gold than we've seen in decades. Russia, China, Turkey, India, they've been loading up. So is this the beginning of the end for the dollar? History suggests probably not anytime soon. Let me tell you a story about the last time the world's reserve currency changed. Back in the 1870s, Britain was the world's economic superpower, and the British pound was the global reserve currency. By 1890, America had a bigger economy. But guess what? The dollar didn't become the dominant reserve currency until the 1950s. That's more than 60 years later. That's how strong the network effect is. Even when something better comes along, the world doesn't change overnight. Trust is built over decades, not days. But this doesn't mean things will stay the same forever. Chapter 7. So, will the dollar reign forever? Let's get real. Nothing lasts forever. The dollar won't be king eternally. But here's what most gold bugs and crypto enthusiasts miss. It's not about which currency is philosophically the best or technologically superior. It's about which one the world can agree on and trust. The truth is, as the IMF reported last year, sanctions have changed the game. When the US froze Russia's dollar reserves in 2022, it sent a message to every country. If you cross America, your dollars might become worthless overnight. This is pushing some countries to diversify, not to abandon the dollar completely, but to reduce their dependence on it. Will Bitcoin benefit? Maybe a little. The Czech central bank governor actually proposed buying some Bitcoin for their reserves last year. Gold will definitely continue gaining popularity as a sanctions insurance. But for the dollar to truly lose its crown, we'd need an alternative that matches its stability and liquidity and global acceptance. And right now, nothing else comes close on all three fronts. Some people even believe the BRICS currency, backed by Brazil, Russia, India, China, and South Africa, could one day challenge the US dollar's dominance. But even if that's true, it won't happen overnight. It would take years, maybe even decades, to build enough trust, stability, and global adoption to rival the dollar. Why this matters? So why should you care about any of this if you're not running a central bank? Because understanding how money works at the highest level helps you make smarter decisions with your own cash. Think about it. When a country like Argentina, Lebanon, or Zimbabwe faces a total economic collapse, what do their citizens run to? It's not gold bars or Bitcoin wallets. It's US dollars. They stash them under mattresses, trade with them in black markets, and even price rent in them. That's because they trust the dollar more than their own governments. That level of practical trust can't be replaced with a trending token or a shiny metal. It's fun to dream about Bitcoin making you a millionaire overnight. It's comforting to think gold will save you from economic collapse, and those investments might have a place in your portfolio. But the reality is this: for the foreseeable future, the world runs on dollars, and swimming against that current is a risky game. Does this mean you should avoid Bitcoin and gold entirely? Not necessarily. Even central banks keep a small percentage of their reserves in gold as a hedge. The key is understanding what you're actually betting on when you buy these assets. You're not just betting on their inherent value, you're betting on their ability to challenge the dollar's network effect, and that's a much bigger mountain to climb. If you learned something new today, smash that like button and subscribe for more financial reality checks. And let me know in the comments. Do you think anything will dethrone the dollar in our lifetime? Is Bitcoin the future, or just a flash in the pan? Thanks for watching.